George just flew from Kenya, I understand he arrived a couple of hours ago. Can we share the observation on what you are experiencing in the insurance space regarding agribusiness transactions in Africa? And what should we be seeing and doing more to increase efficiency and deal flow? George.
Thank you, Chairman. You're right, I just arrived. And if I sleep in the process, sure you forgive me. I think insurance, in agribusiness, there are risks which insurance mitigate. Among them, of course, we have risks like drought, we have weather risks, but I'm going to, of course, access to credit risks, and I think that's maybe what I'll be speaking more about, because the weather risks, normal insurance companies like, cover this. There's a new concept of weather index, which is being introduced in the market, and of course, on the drought is also another problem, which I think we have some regional initiative now going on. I mean, African Risk Capacity is an organization trying to set up a pool together with the World Food Program so that they could mitigate some of those risks. But I think for us as ATI, we were set up to promote trade and investment, and we do basically credit and political risk insurance. So I confine myself to the credit bit of it. In ATI, we've actually supported, agribusiness, mainly in Malawi, where tobacco is 70% of the exports. We've been able to support them. I think there was a deal where PPTA Bank, offered a credit line of 40 million, which we covered as ATI. This for against defaults by exporters, the exporter where Malawi exports the tobacco to. I think we've also done a deal in Zambia, about 12 million, where we covered a grain storage facility, which of course, I think was mentioned earlier, is important for agribusiness. It's unfortunate that, Africa, though agri is the mainstay of most economies, and it's only 5% in terms of credit, banks shy away from it, and I think we as ATI, part of our business is to cover these risks. I think one important thing is to mention is that obviously Africa could feed itself, but it's not possible because of many reasons. One, of course, lack of integration. As you know, take Ghana, for instance, example, would produce cocoa, but I think it will be taken to France or wherever, international market for processing. I would have thought if we had, able to do everything within Africa, and of course Ghana would be able to export to all the African countries chocolates, but now that's not the case. We find that we have to import it from overseas. So regional integration, I think, is very important, and I'm happy that there's this EEC and COMESA and SADC are coming together to form the tripartite agreement so that they could be able to work together. Once that's done, obviously it means that there'll be more trade within ourselves, and South-South trade also could increase, and that's where we as ATI will be able to provide credit risk covers to mitigate these risks.
Doing business in Africa, you can't afford to be without Africa Investor.